Everyone is talking about AI, cryptos, and big tech companies, but honestly, I'm a bit bored. The investing opportunity there is already gone by a while as prices are too high. Instead, today I will present an investment I made in an industry you may have never heard of, which is the offshore oil drilling industry. This investment thesis comes from Monish Pabrai, which is one of the best investors in the world. So if you're curious about learning something about this industry, or you're just wondering why I consider this investing opportunity very compelling, then stick around. I'm Riccardo Paolini, and this is my value thesis. What you levitate, reach in the highest state. Two, gonna keep an eye on cause I never hesitate. Three, gonna breathe. Four, never gonna be ignored. Five, seconds all I need to make you a believer. So, what's the hidden opportunity here? Well, we are talking about the offshore oil drilling market, specifically about those companies that own and operate massive specialized rigs far out at sea. Big oil companies like Shell and Exxon need such rigs to find and extract oil from the ocean. Today, I will explain to you how rigs have such huge comeback potential by walking you through the dramatic past of the sector. The story begins around 2011, with high oil prices translating into high rigs demand, making rig companies flush with cash. But what did they do with that money? Well, they overspent. In fact, they were ordering many new rigs at peak prices, and the timing was terrible. Rigs flooded the market 3 years later, around 2014, exactly when oil prices dropped and rigs demand plummeted as well. Companies started to lose billions of dollars and almost everyone went bankrupt. Yet, here we are. After many years of financial restructuring, we are left with only 4 major companies that are Transocean, Noble, Valaris, and Seadrill. But what truly makes this investment opportunity interesting is the rig supply. In fact, in the last 10 years, no one has built any new rigs, making the market seriously tight and the existing rigs very valuable. But now, how do these companies make money? Well, their business model is fairly simple. They rent out their rigs that are drill ships, semi-submersibles, or jackups to big oil producers on multi-year contracts at a daily rate. Their primary operating costs are relatively fixed and include covering crew salaries, insurance, and ongoing repairs. But what is really important is that the massive capital expenditure of building new rigs has essentially disappeared, as no new orders are being placed. Instead, companies are actively scrapping older rigs with little contracting opportunities to further minimize costs and tighten supply. Now you might wonder why big oil producers don't own their own rigs, right? Well, owning rigs requires huge upfront capital and very specialized skills that are outside the business model of big oil producers. Renting instead allows them to be flexible, reduces financial risk, and allows them to focus on their primary operations. But now that you know what is the rig's role in the offshore oil industry and how their owners make money, let's look at demand. This is where it gets interesting, as demand is quietly but strongly rising. However, you may think that we are fully shifting to cleaner energy. And that's true, that's the direction we are headed. But if you look at reports like the World Energy Outlook, oil is still expected to be vital, especially if current policies don't change and the current political landscape does not suggest that they will change, at least in the near future. Then the projected production for 2050 is only about 10% lower than current levels. The shift to clean energy isn't happening overnight. The world still has a significant and ongoing need for oil. So if oil is still needed, where are companies finding the most profitable resources? Well, more and more it's deep water. This is where industry's focus and capital are really shifting. But why deep water? Well, because usually deep water projects hide massive oil reserves that are financially attractive at current oil prices of about $60 a barrel, especially if we think that onshore oil reserves are quickly depleting. And take a look at this chart of committed offshore investment. Funding for these projects has been on a clear upward trend, and it's projected to hit record highs in 26 and 27. We are also seeing some other clear signs that demand is here to stay for a long time. For instance, subsea installations, that are all the crucial equipment to transport oil from wells to storage and processing facilities after drilling, are expected to jump over 20% on average between 26 and 28. This means a lot more actual drilling in the years to come. Not only that, but we are also seeing a big increase in approvals for new deepwater projects, especially for brand new oil fields, the so-called greenfields. And this focus on new fields, at least in my opinion, is a very strong signal big oil producers are sending us about their confidence in the future of deepwater oil production. Now that we both discussed the supply and demand side of the equation, I want to add a comment on 3 points that I consider as really important. First of all, 3 out of the 4 companies we discussed have very little debt levels because they recently filed for bankruptcy and they re-emerged without any material debt. Second, they own undervalued assets. Each rig costs around $1 billion to be built. $1 billion. I estimated Noble's fleet replacement value to about $20 billion. I went into their balance sheets and they report only $7 billion, an understatement of about 60 to 70%. And the same is true for all the other companies. And finally, and perhaps most importantly, daily rental rates are rising, and they are rising fast because supply, as we said, is tight and demand is rising, and it will rise especially in 2026 and 2027. Companies are no longer desperate, they have the power for signing contracts at higher rates and they are using it. Now look at these charts showing the average daily rental rate for Valaris drillships and jackups. We have already seen some of the most advanced deepwater rigs secure contracts above $500,000 per day, while the average is currently sitting at $420,000 per day, which is nearly double what they were earning just 3 years ago. If demand remains high until 2028 and beyond, as the industry is expecting, it is not unrealistic to consider contracts reaching $600,000 per day, especially since such rates are required to justify investments in new rigs. But let's be completely open. This is not a guaranteed win, no investment ever is, this is the nature of investing, but the biggest and clearest risk that I see is related to a major global recession, maybe due to the trade war, maybe due to something else we don't know or we cannot foresee. But the problem there would be that the oil price would drop well below $50 a barrel, quite probably. And in that situation, oil producers would cut their investments in deepwater projects, putting a big pressure on daily rental rates for rigs. This would kind of invalidate my thesis, but is based on a scenario which is still unlikely. I mean, we don't know what will happen in the future, but we can definitely not predict any big financial recession. And here's something that makes me even more confident about my investment thesis. And okay, we have Monish Pabrai, which is buying, and that's already kind of a guarantee, but we also saw a lot of insider buying. In fact, if we go through the official SEC website, we could see that Valaris CEO, Noble's CEO and CFO, and several directors across these companies have all been buying shares in recent months. Even Tidewater, which is a company servicing rigs and therefore with a higher level overview of the market, has seen a lot of insider buying. And as Peter Lynch once said, there may be several reasons for selling a stock, but there is only one real reason for buying a stock, and that's because you think it's gonna go higher. Finally, we made it. You made it to my investment plan. Now we'll share with you how I am approaching the investment into the offshore oil drilling industry. And first of all, I want to say that it's gonna be a short to medium term bet, 2 to 5 years, rather than a long-term investment. That is due to the fact that the company, the industry, is gonna die in the future. We already know that. We don't know when, but we know that it will happen. And we also know that the management is more focused on getting as much profit as they can from the next up cycle, rather than protecting the company from going bust in the following down cycle. These are the 2 main reasons why I really don't want to get involved in it in the long term. And also, they are definitely non-ESG compliant. They really add a lot to global warming. and ocean pollution, and that's another reason, obviously, why I don't want to be involved in them for the longer term, but rather speculate on the stock. And when it comes to the portfolio sizing, I'm comfortable with a 5 to 10% position, where 10% is definitely more speculative, but as I see a very positive risk-reward profile for this bet, I think I will opt for the 10% position, and I want to get fully invested right now because I see the spark for rising daily rental rates very near into the future, because we know that at the end of 26 and in 2027 we will have many new projects, and with many new projects demand is obviously higher, daily rental rates could move higher, and that's also what the management of all the companies is expecting, and that's why I want to be fully invested right now. Another thing I really want to add is that please guys, do not just copy what I'm doing. Maybe get inspiration for studying your own investments, doing some research, building your own ideas, and then investing according to your ideas. So please don't just copy what I'm doing. This is not financial advice. And please let me know down in the comment if you would be interested into an extra video where I'm digging deeper into the financial statements of these companies, or maybe even the fleet status report, which is essential for investing in this kind of industry. But for today, that's everything I have to say, and see you in the next video. Bye bye.